Patanjali, rise of HUL, creation of quick commerce to sustenance of the big brands. So, Mr. Mehta, always a delight to have you on ET Now. Thank you for joining us. When you look back and analyze the FMCG market or the consumer market, which are the three striking trends for you which have surprised you or have disappointed you?
Hi, good morning, everyone. Good morning, Nikunj. First, my congratulations to ET Now and to you and your entire team. I think you all should be very proud of what you have achieved. But you would, of course, be asking yourself, there is miles to go. But well done, team. In India, consumption story is going to be a secular growth story for years to come. And I believe that India will be to global consumption what China was for the previous 2 decades. We have all the ingredients today, all the ducks which have been lined up to ensure there is sustainable growth for consumption. And we must also, Nikunj, accept the fact that India, 62% of the economy is private consumption. And for India to grow, consumption has to grow. And if consumption grows, India will grow. And I remain very bullish on this. Just talking about some of the trends, you all had also showcased. And if I were to just look at the woods as opposed to the trees, then there are certain trends as opposed to fads, which are going to play out for many years to come. First is expression amplified. We as Indians culturally, we were always told कि यार ज़्यादा show नहीं करना चाहिए. We shouldn't be talking more about ourselves, and we should have very subdued appearance outside. That has changed. That changed in many ways thanks to the social media. And today people are telling the world what they eat, what they do, where they travel, how they're dressing up. And this then manifests in the growth of different categories. Yeah, whether you're looking at fashion, whether you're looking at beauty, this does accelerate this underlying trend. The second important bit is experience now. Indians, we were told that, save money for the rainy day. And only once you have a certain cushion, then you look at spending. But today's generation, they want to experience life. Of course, they are in a much better place than we were when we were at their age, for the simple reason that the economy has grown, the parents have done well. So today, the generation wants to experience. And this, again, manifests in different ways, whether it is travel, whether it is tourism, whether it is going to a new kind of restaurant, is they are not waiting for the retirement to come before they experience. So again, this will give birth to different kind of categories which have hitherto remained nascent in the country. The third important bit is, while the advent of social media has been very profound, there has also been a trend which is search for authenticity. So on one hand, you want to do what the global peers are doing. On the other hand, there is a clamor to go back to your roots, to look at authenticity, and that then gives way to growing the natural products, less chemical, no parabens. Again, that is a trend which is going to remain secular for years to come. And last but not the least, this is a generation, I'm so proud of them, the young generation, is they are purpose-driven. And if you are a brand which goes beyond just meeting the functional needs, I can tell you the consumers will gravitate towards your brand. So from a macro perspective, just look at it. We are a $4 trillion economy. We all aspire to grow at 7-8%, but even if we grow at 6.5%, and the inflation is 3.5%, we are talking about a nominal growth of about 10-11%. That means the economy will grow at about $400 billion. 60% of that, 240 to $250 billion of consumption delta will happen every year. Just look at it, how exciting it is. So whether it is new age companies, Indian entrepreneurs, global companies, I don't think there is any consumer goods company in the world in whose eye India does not feature as a strategic priority.
You on the show, I wanted to talk about those premium categories because they now account for almost about 27% of FMCG sales. And what's interesting and intriguing is that a lot of this growth is actually coming from tier 2 and 3 cities. Tell me, how is it that you see the next wave of premium growth unfolding beyond metros? And what categories are looking interesting right now when you talk about the so-called traditional rural segment?
That's again a wonderful question. Now, when we look at premium, here I'm not talking about masstige or prestige, the LVMH kind of categories. I'm talking about relative premiumization. Generally, the way we go about looking at premium is anything which is indexed 120 and above to the average of the market. 80 to 120 is the belly of the market, and below indexed 80 to the average of the market is what you call as the mass. So I remember during my days when I was leading Hindustan Unilever, we were growing a premium portfolio at 100 bips per annum. So something which was at about 23, 24%. By the time I left, it was 34, 35. And that was over-indexed to the market. Now, India is going to be an exciting market for all kinds of products. Yes, we are talking about 4% of the population or the households. It may be in percentage small, but still you're talking about in the vicinity of 12 million households or 60 million people who I believe have the purchasing power of the West. So premium will remain a secular trend. Then when you look at the upper middle class, we are talking about 11% of the households. Now, 11% of the household means over 30 million households, and that means about 150 million people. So you're talking about 200 million people. They are going to drive premiumization. Premiumization means higher order benefits, and that is going to play for years to come. Then we must also look at aspiring Indians, which is the classical middle class, which would be in the vicinity of about 28, 29%. And then you have the lower middle class on the bottom of pyramid, which is over 50%. Now, in this category, the propensity to consume is very high. And these are the people who are not looking at just the price, but they are looking at value for money. So you can create value for the companies, even catering to the bottom of pyramid because of the sheer numbers. Just look at it, 50% at the BOP level and lower middle class. We are talking about 750 million Indians. Even if your margin percentage is low, in absolute basis, it can come to a substantive amount, and that's where you can create value. So this is going to play out not just in urban India, it is going to play in tier 2, tier 3 cities, and not just in metropolitan India, tier 2, tier 3 cities. And also there are enough opportunities to create value in rural India. That's the excitement about India. There's no category which is anywhere close to maturity.
There are two distinct trends in India. One is companies which in a sense have built their house on distribution channels, HUL, Britannia. And the second distinctive trend is how distribution is now changing because of online and because of the omni-channel presence. Who will be the winner ultimately? Because if distribution is no longer edge, what will be the edge?
No, Nikunj, I would like to slightly correct you on this. Yeah, if I look at the channels, the channel mix today is that the quick commerce is about 3%, e-commerce is about 7-8%, modern trade is about 15, 17%. Institution is about 3, 4%. But the general trade still dominates. The share has come down. The growth rate is lower, but still they are close to 70%. And if I have to do crystal ball gazing, I would be able to say that even after 10 years, general trade will still remain the dominant channel, but the share will come down and they would still be in the vicinity of 50, 55, with the caveat there'll be a highly digitized general trade. So in India, it's such a big market. If you want to have if you're just catering to a niche, you can just be on quick commerce and e-commerce. But if you want to become a national player, if you aspire to be a category leader, you will have to go to general trade. So the evolution in India is going to be very different. The general trade is not going to disappear even after 10 years. They will remain the largest channel, but the highly digitized channel. So depending on your aspirations, you could first catch the consumers on e-commerce and quick commerce. Then you could be looking at modern trade, and then you will have to go to general trade. The important bit we have to understand that the capabilities required to win in each of these channels are very different. So many companies, they do a very good job of building a business of 500,000 crores, mainly in D2C, commerce, quick commerce, and the top end of the modern trade. But when they have to go beyond that, unless they build the capabilities of getting into the science of general trade, they will flounder.
Who will be the winner of this entire quick commerce race? From large corporates to innovators, everybody in a sense is now claiming that they are the best in quick commerce. But there is a huge cash burn there.
Nikunj, when we look at today's world, the age of the big winning necessarily is over. It's not about the big win beating the small. It is about whoever is more agile, whoever is more adaptable, beating the slow. So you could have a big company, but very agile, they would continue to win. Or you could have a small company, very swift, very innovative, very agile, and they would be able to win. So I would say who develops the capabilities, the agility, the resilience, and the adaptability to win in the new age, they will keep winning. I think the big companies have to be on the watch. That the era that just the size gives them a moat? No, it does not. But for small companies, if they don't build capabilities, which will take them to the next 1,000 crores, they will also struggle after a while.
Mr. Mehta, so good having you today on the show and getting in all that insight. It's always so great speaking with you.
Thank you so much.
Thanks.
And wish ET Now again all the best.
Thank you for joining in on our very special day. Okay, let's take a very quick break on that note. Markets are actually holding up. We're up about almost 0.7%, and that's just the index. There are a lot of individual